First up, it's Tony Bell, as I said, Head of Multi-Asset Fund Management at Vunani Fund Managers. Thanks very much for your time. Before we jump into the fund at hand and a couple of your hot stock picks, let's just start with investor sentiment in the current environment. I was chatting to Viv earlier at the top of the show, and we were saying yesterday the market focused on the positive corporate earnings coming out of the US. They ignored the patchy economic data flow because they decided to go with the positive. Today we've just seen the Dow dipping into the red, although we still had that positive corporate news flow. So one thing that we can be sure about is going to be topsy-turvy going forward.
Sure.
What do you as an investor in South Africa do?
I think the most important point to try and convey to your listeners out there is that it's very important to step back from the noise. There's an enormous amount of noise. If we look at the world from a global perspective, you've really got the US coming out of a recession, a very deep recession, reasonably well. Sure, the jobs data is still a little disappointing and the housing market is taking time to get going. But overall, if you look at a broad range of indicators, the surprise trade from my perspective is to the upside. We could find the rate of change in the US starting to accelerate. China, there's a lot of talk about hard landings, double dip. I think your previous guests, and Azar in particular, covered it particularly well. I don't think there's a chance of any hard landing in China. They had to remove some of the excess credit because of their linkage through the currency mechanism to the dollar. China was getting very overheated, and I think the authorities there have taken a very proactive and very sensible approach in cooling that economy. I think the real issue is Europe. You're sitting with a very unwritten rule book. The Eurozone was never designed in a way to accommodate this sort of stress. And I think what worries me the most at night is that the mechanisms for the Spanish government, the Portuguese government, and the Italian government to deal with the crisis are very limited. The normal mechanism of currency depreciation is not there.
I want to jump in because obviously tomorrow then is what we were discussing earlier, the Spanish bond auction, and
Sure.
That is obviously for a 10-year bond.
Yes.
What are you expecting on that front? Is it an all fall down scenario?
Again, what's very important is to understand the dynamics of what's happening. The ECB has made €1 trillion available. That is unprecedented. The primary purpose of the LTRO, the long-term refinance operation as it's called, is to provide liquidity through to the banking system. In simple terms, make sure the banks don't collapse. That is very important in terms of giving financial markets assurance that systemic risk is not going to increase. Countries are going to go through pain, and I think bond yields will rise because the pain that needs to be taken and the adjustment in interest rate policy that needs to happen could well result in higher yields. But that doesn't mean an all fall down. It's important to keep that distinction.
And speaking of Europe at the moment here, do you expect, for instance, I know Japan has come in and put about 60 billion into the IMF here. Do you expect to have some payments coming through from the US and China over the next few days?
It's possible. It depends on what the purpose of those payments are. The role of Federal Reserves and central banks around the world is not to buy sovereign bonds. So the yield that we see sovereign bonds trading at will be levels at which investors are comfortable to buy bonds. What the ECB has implicitly done is provide an underpin to the financial stability of the Eurozone, where a lot of the banks in Spain, in Portugal, are buying their own sovereign debt.
Yeah, with regards to the LTRO, of course it was $1 trillion, as you mentioned here.
Yeah.
But some estimates say that if Spain had to have troubles, like Greece had troubles, close to 2/3 of that LTRO would be used for Spain alone. Forget about any problems that we might see along the way in Italy. Would you expect them to step in and increase that beyond that $1 trillion going forward?
Again, I think the facts are always important to look at because when the Eurozone crisis happened, Spain's debt to GDP levels were quite manageable. They're still very manageable. So I ask myself the question, what would result in a Spanish default? And
the tipping point, so to speak.
What would be the tipping point? And I don't see anything on the immediate horizon which would result in bondholders revolting. What I see happening is a very logical readjustment of the price of money through the interest rate mechanism to make Spanish bonds more expensive than, for example, German bonds. And that process will continue as this very painful period unfolds.
I want to bring it home now, and I want to be stock specific.
Sure.
There are a couple of stocks that you've highlighted
Sure.
as potentially good entry points into the market.
Sure.
Exxaro, let's
Yes.
start on the resource front.
Cool.
What is the rationale right now for either being in or buying at current levels Exxaro?
Sure. What I like a lot about Exxaro is it's a little different from Billiton, it's a little different from Kumba. Before I came on air, you covered Billiton, the results. A lot of the mining houses like Billiton and the single producers like Kumba are very attached to the iron ore market. You mentioned earlier that there's a huge amount of production coming on stream, in fact a doubling between now and 2015. What I like about Exxaro is it diversifies the mineral content in one's portfolio. Mineral sands, very exciting products. Titanium, we all know about. Rutile, zircon, these are part of the rare earth minerals that are becoming increasingly difficult to find, and they're starting to carry a premium. That little basket of mineral production within Exxaro has increased in price by 100% over the last year, whereas the level of iron ore production going forward suggests iron ore prices will come under pressure.
With regards to Exxaro, I know they purchased some iron ore assets in Central Africa recently.
Yes.
Do you see them doing more acquisitions throughout to diversify their geographic exposure?
Yeah.
And do you think that might have an effect on the stock price in the shorter term?
Not in the short term, because they're very dependent on coal. Medupi is going to be a big deal for them, as is Kusile. That's low margin, very stable business. I really see the kicker in Exxaro coming through about 30% of their contribution to earnings from mineral sands. So that for me is an important differentiator.
Let's swap sectors completely. Coronation.
Yeah.
I mean, it's so linked to the market, this stock. If the market does well, Coronation does well. Or is that unfair?
It's partly unfair. I think it's one that's really come in under the radar screen. A lot of people haven't focused on Coronation. It has been my second biggest active bet. Quite strange to have an active bet in a competitor. But they have accrued assets very strongly in the last 18 months. Their asset base, particularly in the retail segment, has grown phenomenally. They have done a soft close on institutional business, but the margins in the retail business are very good, with very significant performance fees. So I don't worry too much about the markets. What I like is the annuity income.
Speaking of your active bets, what about your active non-bets, as I say? You were speaking earlier, you mentioned that MTN is the stock that you have the most underweight in.
Sure.
What's your reasoning behind it? Are you afraid of this Turkcell issue in the US and the exposure to Iran, or is there some other factor that's making you nervous about the stock?
Yeah, it's a good question. For me, it really talks to the valuation. A lot of brokers' research reports I read put a value of about 165 on MTN. That's still rated at about a 10% premium to Swix. If I adjust the valuation to 0.95 of Swix, my fair value drops to about 130, and then if I take off the implied loss of an exit from Iran, the number generally quoted is 17 to 20 Rand, then I'm sitting with a stock slightly over 100, which at 130 doesn't make it particularly cheap. So I think the forecast risk on that one is quite high.
What about the reputational damage in terms of a negative outcome of the Iran situation? Do you think MTN could recover from the reputational damage that it would incur?
It's a nice question. If you go back in time and you look at companies that have gone through issues where reputational risk has come to the fore through court cases, there are two things that one observes. Firstly, it gets messy. Secondly, it drags on for a long period of time. And whilst the company might not suffer a short-term structural derating, you generally tend to find that the share derates progressively over time. You had Pick n Pay on earlier, and I would argue that they have had a slow grind in reputational damage, as has Investec. And then what happens is the stock never really regains its peak form, so it doesn't trade at the premium that you look for as an investor, and it becomes a little bit of a cash cow, where yes, it pays a very nice dividend, but you don't trade it at 10 times Swix, 110% of Swix, you trade it at a discount to Swix.
Another stock that you have a bet on is Old Mutual. What do you make of this large dividend they had, and as well as this strange little 7-for-8 consolidation that they had as well at the same time?
Well, the story on Old Mutual is very interesting. It's very nice to receive a dividend. It is a little sad that the assets that management touted as being, the future of Old Mutual have now been sold off and given rise to the huge increase in share price we've seen. My real story on Old Mutual is not the dividend flow. It really is to look at the company's embedded value post the dividend. And there I find that the company is still trading at about a 30% discount to embedded value, whereas Sanlam's trading on a 10% discount to embedded value.
So you would like to see Old Mutual closing that gap and trading closer to a 10% discount to embedded value?
It could easily trade up to $23. And I think that still offers
a fair
a bit
play, currently at 18 Rand.
Correct.
So hold on for the
Slightly
23.
higher, yeah.
Then what do you do when you get to the 23? Is that it? Time out, take your money.
You've got to take a long, hard look at it then and say, well, what's the position with Netcore? There's a lot of rumors circulating that China might be interested. So that is a play that might still happen. I think Old Mutual has made no secret of the fact that they would be open to a bid on Netcore. So I don't hold any direct Netcore in the portfolio. I've got the Netcore play through Old Mutual. There's a very high, nice margin of safety in holding Old Mutual. And then I think
would that be a significant value unlock for Old Mutual?
I think that would be a very significant value unlock. And then you'd have to look and see where the stock trades on merit. But I would be less inclined to have such a strong active position if that were to play out.
Looking at your portfolio as a whole right now, I mean, obviously in the South African market we have a large exposure to resources, but I see that you have a large exposure to industrials. Industrials have outperformed the other sectors significantly since 2008.
Yeah.
Are you still going to maintain that going forward, considering this outperformance, and do you think that will be maintained going forward as well?
It's also a jolly good question. What I've done very recently is a massive sector rotation out of what I think are very expensive consumer stocks, Spar, Shoprite. I like the businesses a lot. I think they're very well run. But when you're paying a 60% premium to Swix, in the case of Shoprite, I think it's a little excessive. So I've looked to diversify or shift my holdings more into companies like Bidvest, like Imperial, that will benefit from a broader recovery in the domestic economy, as opposed to paying a high premium for companies that have done well in the past. But I can't see how that value is going, how their performance in future is going to translate into value for our clients.
We're almost out of time, but
No
I
problem.
noticed one other stock I want to talk to you about, and that is Pinnacle.
Yes,
It's done very well to this point. I can see the broad
been
smile.
a great stock.
So now what do you do with it at these levels? Can it go higher? Are you holding it for longer?
Yes. I think the guys are doing a particularly good job. I've met with the CEO very recently. We had a long discussion. And what I like about the group, it's got a very stable, sensible strategy going forward. They do represent the largest brands in the PC market, but he's starting to think a little bit more broadly into the cloud space. And I think as companies move into data backup in the cloud space, Pinnacle's going to be there to take that space. So it's a high margin business. It's still projecting good earnings growth, and I don't think it's expensive.
We're going to take one more First Rand,
Sure.
because I think we better talk about your banking exposure on
Sure.
this one. Is First Rand your biggest play in the financial stocks beyond Old Mutual and I suppose Coronation in the
Sure.
same sphere?
Yeah. The story there very simply is that First Rand took the pain early. It was about 2 years ahead of its competitors in cost cutting. It's now able to leverage off a very well structured balance sheet. It's growing its book quite aggressively. It's taking a lot of business from Absa and Netcore. Standard Bank is catching up, but I think the management team at First Rand really needs to be commended for an exceptionally good job, and in the process creating very good shareholder value.
And what do you make of First Rand's move into the high-tech banking sector? I mean, with their apps coming out and the discounts on mobile devices, etc.
Yeah.
Do you think this is more of a marketing ploy, or do you actually see that's the direction that you think the banking sector is going to take in the
Yeah.
future?
It might be. I mean, I am a confessed Apple junkie, so I might be slightly biased on this one. I think it facilitates ease of use and ease of transaction flow, and I think the CEO there in particular is very forward-looking in how he's positioning the group to take advantage of new technology. So I'm very encouraged by what I see.